You are watching Market Watch, the brief overview of the key events from the world of finance. Amid growing concerns over the debt burdens of the U.S. and Japan, investors remain cautious. Asian stock indexes showed mixed performance, while futures for European and U.S. markets stayed stable. Yields on U.S. Treasuries remain elevated, reflecting the market's response to fiscal challenges. At the same time, the dollar remains resilient. Market participants are awaiting new signals from the Federal Reserve regarding the future path of interest rates, especially ahead of the release of key U.S. inflation data. These factors are shaping a complex global investment climate. At the May 28 auction, Japan's Ministry of Finance faced reduced interest in its 40-year government bonds. The bid-to-cover ratio dropped to 2.21, the lowest level in nearly a year, despite high domestic participation. This was accompanied by a rise in yields to 3.675%, reflecting investor concern over Japan's massive public debt, which exceeds 240% of GDP. The ministry is considering a shift toward more short-term debt issuance to reduce vulnerability. While domestic demand remains stable for now, rising yields indicate mounting pressure in the bond market, which may influence future issuance strategies and fiscal stability. Oil prices rose slightly after the U.S. suspended Chevron's license to export Venezuelan crude. This raised concerns about potential supply disruptions, particularly for U.S. refineries that had been receiving limited volumes from Venezuela. Brent rose by 0.4%, and WTI also edged higher. However, the overall price increase was limited as markets brace for the upcoming OPEC+ meeting, where a production hike may be discussed. The balance between geopolitical risks and expectations of oversupply is creating uncertainty for the short-term outlook on oil prices. Bitcoin remains stable despite turbulence in traditional markets. The main drivers of its resilience are ongoing interest from institutional investors and its perception as a hedge against inflation. A growing number of companies view Bitcoin as a tool for diversification and even as a payment method. At the same time, analysts remain cautious due to potential regulatory actions that could affect liquidity and access to digital assets. For now, Bitcoin continues to be one of the few assets capable of attracting capital amid fiscal and macroeconomic uncertainty. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.